Thank you. So we'll just give a second for us to go live. All right, there we are. Well, thank you everyone for coming tonight, and thank you very much for our panelists for giving up their very valuable time to participate in this forum. And this forum is titled, "My Taxes Have Gone Up. Where did the money go? What can I do about it?" And this is sponsored by the League of Women Voters. And just a little bit about the League of Women Voters, which is a nonpartisan political organization that encourages informed and active participation in government. A role of the League is citizen education, with this forum being the result of dozens of inquiries and discussions with residents on the important topic of the town's finances. Today, the panel is going to answer a collection of questions and discuss a range of topics that have been on the minds of Plymouth residents and collected by the League of Women Voters. So what we have are some note cards and pens over here for questions that once we go through the first part of the forum that they'll take afterwards. If you just write it down and leave it there, we'll present the questions afterwards. And then in planning for this forum, we asked the panel, which is made up of Lynne Barrett, who's our Director of Finance, who's been here for 16 years in the town of Plymouth. Derek Brindisi, who's been here a little bit shorter, but has been, compared to 16 years, but has really got off to an incredible start with his time here as our town manager. And Dr. Chris Campbell, who's a superintendent of schools who's been here for 15 years. So we have such an incredible depth of knowledge here about the town of Plymouth, and we're all very fortunate to have their time this evening. So with that said, so one of the things we asked when planning for this forum, what were some of the common misconceptions or things that residents don't realize about the town that affects the overall budget and taxes? And one example was the sheer size of Plymouth compared to other towns and cities. And this first slide here, which I had never seen before, is totally illuminating to how big Plymouth really is. So that's Plymouth to scale on the Boston metro area. And because of Plymouth's geographic size and population of 62,000 plus people, there's an enormous volume of activities that happen every single year. And on the next slides, prepared by the panel, the information on it, we're going to illustrate some of those activities. And please, either Lynn, Derek, or Chris, if there's anything that you want to just stop on for a minute as we kind of scroll through, please let me know. But as you can see, between the number of employees, the calls and activity here is just incredible.
Let me see. I put some of this stuff together. What we asked the departments this year was really to tell us their story, like give us some of their statistics and data. And basically, I took one from each department, but there's several more, numbers of things that each department does for the community, So that's just sort of just a little bit of what's going on.
Yeah, and Patrick, if I could add, so, if you go back to your original map of the sheer size and geography of the town, and we always talked about this, so when I was the assistant town manager 5 years ago when I had left, and, folks would ask me about my time here in Plymouth, I would say how complicated Plymouth was, and the reason being is, because of the geographic size, we have urban issues, right? So the downtown area, north area, we have suburban issues, and then we have a lot of rural issues. And when you look at it in that context, a lot of other municipalities, they don't have that varying degree of all the different complications a community will have. When I worked for the city of Worcester, we had one issue. We had urban issues, right? So it was really easy for us to focus our energy and attention on that. But in this community, we have to be flexible. We have to be adaptable for all the different issues that this community faces.
I think related to this slide too, Ms. Flaherty, and the sheer size, for us the challenge is transportation. Dr. Campbell, your microphone's off. It is? Can you hear me? Yeah. Okay, thank you. Related to the sheer size, we're 104 square miles. We have, I believe, I heard from DPW, over 400 miles of roads. A lot of our major roads, as the residents, I'm a resident for 22 years now, a lot of them, the major roads are north-south. You don't have a lot of intersections that go east-west. Makes it very challenging to transport students when you have 7,300 students across 12 schools. It really adds to our transportation challenges. So we have, hence the reason we have so many buses that are transporting students across this district.
Dr. Campbell, I know the one issue that has to do with the way that the town does not get reimbursed for these types of activities, and that's something that we talked about before. Maybe you can touch on that too?
Yeah, so as I said, transportation is, one, it's a headache for us, but it's also a major driver of our budget, as you can see. Plymouth spends over $11 million transporting students annually. So this is our yellow buses, but this is also transporting students with special education needs that require specialized transportation. This is transporting students that go to charter schools. A lot of people don't know that we're responsible for transporting students that attend charter schools here in Plymouth, so Rising Tide, MAP Academy. We're also responsible for transporting students that are homeless or in foster care situations. We have over 100 students annually that are considered homeless, and we're transporting them back to their neighborhood schools. So if you have a student that, say, is from Braintree originally, and they're homeless and they find themselves doubled up or in a hotel here, we're transporting those students back to their school of origin in Braintree, which is very, very expensive, and I'll get into that later. So this really drives a lot of our costs on top of, as we all can relate to, the fuel escalation that's part of our budget as well.
Thank you. And before we move on, any other comments about the geographic size of the town and how that plays into things that affect our budget? All right. So the next few slides will be presented by Director of Finance Lynne Barrett. And so what we have are an overview of the town's budget, which includes the school as well, and then Dr. Campbell will talk about the school specifically afterwards. But Lynn?
Thank you, Patrick. So this slide is just a pie chart on, as Patrick said, opening up, like my taxes are going up, what do my taxes pay for? So this slide shows the percentage of where your tax dollars go. So if you were looking at $1 of your tax dollars, 75% of it is going to salary and benefits of the employees and retirees that work for this town. So there's 50% is salaries, almost 25% is fringe benefits. Debt service is about almost 8% of your tax dollars. Other departmental expenses is about 16%. Fuel and utilities, 0.73, departmental equipment, 0.33%. So the primary focus, or where our dollars are spent, is on workforce, the people who work in this community, work at the school department, work at the schools, public safety, DPW. That's really the primary focus of the budget in our tax dollars. This next slide breaks up that same pie chart, and it's showing you of all of those sort of departments that we have, this is the tax dollars and what's going towards the school operating budget, to fixed costs, which includes all of our fringe benefits and other insurances. The next highest one is public safety, which includes police, fire, and our emergency management operations. The next one is our enterprise funds, which is water, sewer, solid waste, airport, and our cable enterprise fund. And I will make a note that those enterprise funds are funded through fees, not necessarily your tax dollars. So I just wanted to make that clear. But the next highest expense is debt service. The next one is other amounts that we need to raise on our recap sheet, and that primarily includes state and county assessments. So the superintendent talked about charter schools. We're charged for students, Plymouth students that go to those charter schools. So the state charges us a fee for that. They also give us a small reimbursement towards it also, which comes out of our Chapter 70 money. But that's one of the items that gets raised on our recap under that other amounts to be raised. The next highest area is Department of Public Works, then Community Resources, which includes the Center for Active Living, the Veterans Office, the Library, and Recreation. The next level is Administrative Services, which is the Town Manager's Office, the Town Clerk's Office, the Human Resources Department, and the next one is Department of Finance, which includes accounting, assessing, treasurer collector, procurement. The next one is information technology, and it just keeps going down to the smaller departments. But that's really where, like, all of our spending categories sort of line up. In this area right here, just wanted to show you, of the general fund, what are our dollars that fund that general fund budget? And the total, this is reflecting last year's budget, which is fiscal '23. Right now, we're working on fiscal '24's budget, which starts July 1st of 2023. So this number reflects the fiscal '23 budget, which we're in about halfway through so far. So our total revenue for that general fund budget was almost $267 million. $205 million of that is our property taxes. So 76% of the revenue comes from property taxes. 13% comes from state aid, which includes Chapter 70, which is our school aid, general municipal aid, which is lottery and that kind of thing, and then local receipts, and then other. I think we've got another slide that gives a little bit more detail of each one. So in the real estate section, of the real estate taxes, property taxes represents in total 96%. So 84% of our real estate taxes is from our residential, 8% is from commercial, and then 4% is from industrial, and then 4% is from personal property. So those are the components that make up the revenue of the property taxes that goes to pay for the budget. Most of it is coming from residential. The next slide. This is our state aid of $35 million. So the primary one is Chapter 70. That's our school aid, which helps pay for school budget and other costs in the general fund that support the schools. For example, the benefits of the school and that kind of thing. The next item is general municipal aid, which is the lottery money. So that's our distribution that comes from the state for lottery. We also get a small charter school reimbursement. We also get paid from the state a portion, almost like a tax kind of for any state-owned land in Plymouth that the state owns, but it's subject to appropriation. So if we're not getting paid sort of the same value that you pay for your land, that this, like Miles Standish State Forest, we're supposed to get paid a certain amount, and they pay us a certain amount, but it's nowhere near what the value of that is. And the state determines what the state-owned land reimbursement is going to be. We have no control over that. We also receive from the state reimbursement for our property tax exemptions. So we have several exemptions for the elderly, for blind, surviving spouses, veterans. So we get a certain percentage back on those property tax exemptions from the state. And then veterans benefit reimbursements. So any veterans benefits that the town gives out to eligible veterans, we receive a 75% reimbursement in the following year for that expenditure. So that makes up the revenue for the general fund budget from the state aid. The next one is local receipts. So local receipts is everything else sort of that the town collects that helps to fund the operating budget. Motor vehicle excise is the largest one. Licenses and permits, so like building permits, the licenses for the alcohol licenses in town for bars, stores, and restaurants. Other excises include hotel, motel, the cannabis excise, trailer excise, boat excise, penalties and interest, rentals, departmental revenue and fees, investment income, and fines and forfeits. Those are all general fund local receipts. And then the next section is the other category. So there are other sources of revenue that help fund the general fund. Indirect charges are for each of the enterprise funds. So each enterprise fund has, they pay for their fringe benefits for their employees, they pay for insurances, they pay for their retirement appropriation. So we charge back to the enterprise funds what we call an indirect charge. So that's a revenue source into the general fund because those were those costs are appropriated. Other funds are, that help pay for things in the general fund budget are specific revenue sources by Mass General laws that you can use these certain funds to pay for certain things in the budget. So for example, Waterway Improvement Fund can pay for certain expenses of the harbor master or the T-Wharf, things like that. Cemetery perpetual care we can use to pay for services of the cemetery department to care for the cemeteries. We have certain revolving funds that town meeting authorizes every year, so those revolving funds, if we have any salaries being paid out of those revolving funds, they're required to also pay for the benefits. So that's a reimbursement to the general fund. And then we have the meals tax fund and our pavement management stabilization fund, which helps pay for principal and interest on meals tax for the town hall, and then the pavement management for our road improvement program. And then Title V, we have a Title V betterment program in town where property owners can borrow money from the town to upgrade their septic systems or to connect to the sewer, and they pay us back over a period of time, so that's like a loan, so that revenue comes into the general fund. And then there are times, under certain circumstances, where we have used other available funds, like free cash or stabilization, to help fund parts of the budget. Next slide.
I think, yeah, that's that section for now. Thank you very much,
Nice job,
Lynn.
Yep.
And then, Dr. Christoper Campbell, so we
Yes,
have some
thank
slides here that relate just to the school portion of the budget. I want to go back to that, this really briefly, and why it's so important. We all know, relative to the schools in the town, the amount of budget that it is, but really, when you look at what the school side is, you can see how important it is to the overall budget on this slide here, with that bottom row being the entire school operating budget. So it is a huge part of what makes the town go, and Dr. Campbell, thank you very much.
Yes, thank you, Patrick, appreciate that. If,
Sorry. a little
That's
too
okay?
far.
There we go.
There you
All
go.
right, so, yes, the budget, we realize that we're a significant part of the town budget, and we do appreciate greatly the support that we receive from this community. So as you can see, the general breakdown of our budget, the majority of it goes to salaries, 63%. So this includes everyone, obviously our teachers, our specialists, our guidance counselors, our nurses, our mental health clinicians, school psychologists, all the staff that are there to support our students on a daily basis. Contracted services is 16% of our overall budget. A large portion of this is comprised of transportation costs, which I'll get into in greater detail in a later slide. All the supplies and materials that we use to operate our schools make up only 2% of our overall expenses, which is pretty insignificant when you look at it that. Other expenses are 1%, which is things such as professional development, professional memberships, travel reimbursement, things that don't fit into the other categories. And then 19% of our operating expenses fall under insurance, both for active employees and retirees. The next slide is, and Lynn referred to this, Chapter 70 aid. So this graph illustrates, and it's hard to see, I apologize, but the numbers are pretty small. This graph illustrates the Chapter 70 aid to Plymouth since 2013. So again, Chapter 70 is the programs of state aid to public elementary and secondary schools. As you can see from this graph, it's been relatively flat in the last few years, really increasing only by 1.75% in the last 3 years. In 2018, we saw our largest increase that we had seen in 9 years. This was due to the implementation of full-day kindergarten the year prior. So it's always based on a reimbursement from the prior year. In 2017, the community was generous enough to support our implementation of full-day kindergarten. We were one of the few districts that didn't have it then. And when you have students in half-time versus full-time, or I should say full-time as opposed to half-time, they're counted as a full student. So you're getting greater reimbursement for that. So that's why you would see that jump in 2018. So the next slide. I thought this slide was important to show. This is what we call per pupil expenditure. So per pupil expenditure is calculated by dividing the district's operating costs by its average pupil membership. And this includes in-district expenditures per pupil and total expenditures per pupil, both in-district students and students that are out of district, the spending on our enrollment. So it's calculated information that's provided by each district's end-of-year financial reports. So you'll see here, we're on the bottom, and these districts that I pulled, this is a report, and anyone here could go and get this on the Department of Education website. It's called Radar. So if you Google Radar Department of Education, it will take you to a website that will give you this information. You can manipulate it in a number of ways. But these are comparable districts by community wealth. So when we look at community wealth. So as you can see, our total per pupil expenditure is higher, but when you look at the categories in terms of administration, instructional leadership, we're right in the average range. Actually, our teachers are lower in terms of expenditures here in comparison to these communities, but you see the other teaching services are lower. We're right in the middle in professional development. Instructional materials is on the low side. Guidance and psychology is in the middle. Pupil services is higher. This is medical and health services. Transportation services is included here, things like that, and school security. We are very fortunate to have school resource officers in all of our secondary schools, and we've also added school resource officers to our elementary. We have 2 that float through our elementary schools. They've been a great support. The police department has been a great support to our school community for many years, and we're very fortunate for that. Operation and maintenance, again, is right in the middle of these comparable communities by wealth. And then you can see benefits and fixed costs is really where we stand out here. And this is largely employment retirement contributions, insurance for active employees, and insurance for retirees. But when you look at what we're spending in terms of our educational dollars, we fall low in some cases in terms of the teacher expenditures and other areas. Next slide, please. So I talked about the budget drivers. So the rate of inflation, I think, is something that we can all relate to. It's been extraordinary. We haven't seen it like this in recent years. You know, I think last December we were at 7%. We were at 9.1% last June, and it's been hard on a lot of people. We've really related to that as a school community too. So inflation has been historically high for us. But as you can see, approximately 20% of our budget is comprised of very fixed costs, such as transportation, contracted services for special education programs, and special ed placements and utilities. Only 2.5% of our budget goes towards all supplies and materials for the district, but really some of the drivers of our budget is transportation. We spend nearly $11 million in transportation for our contracts and fuel escalation. It's extraordinary. Special education placements and the OSD, or the Operation Service Division, I'll get into that momentarily, but that department dictates the tuition rates and the increases which we are obliged to pay. Those are going up by 14%. Utility rates have gone through the roof. Supplies and materials, those expenses, while they're a small portion of our budget, have gone up considerably. So a pallet of paper, for example, a year ago was costing us $975. It's up to $1,600 now for the same pallet of paper. We try not to use a lot of paper. We've really tried to minimize that, but it still adds up. And security, this is something that, in terms of an addition, we have added 2 additional school resource officers, and we split that with the police department, those positions. They're in both of our budgets. Next slide, please. So just to kind of put this in perspective, the fuel escalators on the top, on top of having rising costs in transportations and those contracts, we're responsible for the fuel escalation fees that we receive. So if we sign a contract and the fuel is at a certain rate, anything above that rate, that difference is a fuel escalator, and that is something that we're billed on. It's part of those contracts that you see with transportation. So the left part of this slide shows our fuel escalators going back to FY21. So you can see we spent almost $22,000 in fuel escalation fees, which is about $2,200 a month when you think about a school year. A year later, those escalation fees went up by 900%, almost $200,000 for the same. And those are things that you're not always prepared for those. I think the fuel went up quite significantly and took us all by surprise. Fuel escalation this year, thus far, for the first 3 months, is close to $85,000. If we were to continue at that rate, we're looking at $280,000 in fuel escalation fees alone. The cost to heat, our homes, I think we can all relate to that. Things are going up. This is just an example from oil purchases at Manomet Elementary School, one of our smaller elementary schools, where oil was coming in at ranging, $1.47 to $1.96 that year in 2020, 2021. So it cost us about just under $42,000 to heat that building. It jumped to $55,400 the following year. Keep in mind, we only had 1 delivery at that higher rate of $4.13 per gallon that school year. We're currently seeing rates at about $4.03. So we anticipate that it's going to continue to rise to heat our buildings. So you see the cost of oil is really, in that time, has gone up by 206% since 2021. I mentioned the Operational Service Division, or OSD. So OSD is an executive branch agency of the Commonwealth, and it falls under the Executive Office for Administration and Finance. So one of the many things that they're responsible for is setting tuition prices for more than 200 approved special education programs in approximately 100 private schools. So for those who aren't aware of how special education works, we work very hard as a community to try to educate our students within the district. We have some students that have very complex disabilities. We've actually added many programs over my 15 years here to include our students in our schools at a much more substantial rate. But when we can't meet the needs of those students, either they have profound cognitive impairments, significant physical impairments, neurological disorders. They may have complex vision, hearing, multi-handicapped students. We have an obligation to find a placement that's a little bit more restrictive, that's quite substantial in cost in these special education programs. I started my career in one of those programs about 30 years ago. They could be well over $100,000 a placement. But the OSD is responsible, getting back to my original point, for setting the prices for those placements. And typically, those inflation rates from year to year will go up between 1% and 2% annually. So in FY11 through FY23, the average tuition increase, that rate increase, has gone up by 1.87%. The lowest was in FY11, actually. It was under 1%, about 0.75, and FY21 was the highest in recent years at 2.72%. The OSD rate that was announced in October, which is sent to superintendents for financial planning purposes, was set at 14% for the next year, okay? That, I had the same reaction. I heard a sigh in the audience. To put that in perspective, the OSD proposed increase is 550% over FY23 and nearly 750% over the average in the last 13 years. This OSD rate for us is an increase of $1.2 million without adding any students to any of these programs, and accounts for a 1.13% increase to our operational budget. So this is a concern to us. As you can see, statewide, a conservative estimate of this is approximately just shy of $93 million. This is based on all the students who are placed across the state in approved private special education programs and what the cost would be to districts across the Commonwealth. And for us, again, it would be 1.2 million. The next slide. Another thing, if we can go to the next slide. Another thing to keep in mind that a lot of people don't know, that our demographic has really changed across this community. One thing I'm very proud of is the increase in the diversity. I think it's added a great addition to our community. But this slide here you can see is an example of one of those changes, and this is our English language learners across our district. So when I was assistant superintendent, first came here in 2008, 2009, we were servicing 42 students who were non-English speakers for English language services. We are now at 274 English language learners. So this graph illustrates that, and you can see since 2009, in the last 15 years, that we've had a significant increase. In the last year alone, we've seen a 22% increase in our English language learner population, and in a few years, we've seen a 222% increase. So you can imagine that going from having 42 students to 274, and we also have students that are not receiving services that are also limited English, and families that opt out. So we have about close to 400 families that are non-English speaking or very limited. So not only does this add an additional service to their students, but it's also adding interpretation services and services that we have to do in terms of translation for families that we're obligated to do, which is the right thing to do, but we're obligated to do that. So this is a changing demographic that we've seen in this community in the last 15 years. If we can go to the next slide. In terms of mandates, we have a lot of mandates that are thrown on us as a school district and as a community, really. If you're not familiar with this, the state auditor, Suzanne Bump, recently did a report identifying that there's $1.2 billion in unfunded mandates. The report is entitled "Fulfilling the Promise of a Local Aid by Strengthening State-Local Partnerships." And she identified, again, $1.2 billion in unfunded mandates. And really looking at several major categories of state aid, and identified of that $1.2 billion, $711,400,000 in unfunded mandates related to school aid, and $448.3 million of that is related to school transportation alone, which I'll get into in greater detail as well. Another example of some underfunded, unfunded mandates, circuit breaker. Circuit breaker is extraordinary relief for special education. So again, when we have students that are, over a certain foundation budget, there's a difference that is calculated there, and there's eligibility for relief from the state that's always been underfunded, and that's a significant cost to us. Foster care and foster care transportation, I mentioned that earlier. We're obligated to transport students who are in foster care placement. Vocational school transportation, if we have students that are seeking to go to an agricultural school, for example, since we do not have that particular vocational program, and if the students were to be accepted to that program, we're obligated to transport those students to those schools. So if they're going to Bristol Aggie, for example. And Chapter 78, as I said, is been very flat in terms of that state aid for education, as an example. So the next slide. So you may recall, I don't know if anyone watched my presentation recently regarding EL transportation. It's one of the strategies that we tried to do, and we're always looking to try to reduce our expenses. We realize that the school budget is a significant part of the community budget. And as I said, transportation is something that is considerably expensive. We are obligated to provide EL services to students that are non-English speaking. We have seen 15 years ago, we had EL supports at Hedge Elementary. We may have had some students at Cold Spring, at the middle school, at PCS, and the high school. We are seeing students not only living in the north part of town, but in west and south. And originally, we were transporting students to other schools to provide them those services because we did not have the actual support on site, and we're obligated to do that. So working with the Department of Education, they said you need to, transport these students unless you have someone on site. Well, as you can see on the left side of this slide, in FY20, that was a strategy that worked for us because we did not have a lot of students, as many students then. Just 3 years ago, I mentioned that it went up 222%. So we were spending over $36,000, a little over $36,000 to transport students to other schools to provide those services. You can see in FY22, we expended almost $430,000 transporting students. You keep in mind, we're not putting a handful of students on a yellow bus. That wouldn't be responsible because we just wouldn't be able to do that in the middle of the day, or during the day, there'll be another bus run. The transportation it can average for some of these vans $19,000 to $20,000 to transport a student in a year. And that includes the vocational transportation, special education transportation. It is very, very expensive. You can see to date, we have spent $57,000, and our budget is now down to $150,000 from over $400 projected for FY24. The reason, because strategically what we've done is we've added additional ESL teachers in other locations where students were residing, so providing them the services in their neighborhood schools, which has eliminated the need to transport them. So by doing so and spending the money on the ESL teacher, we've been able to reduce our overall costs by $170,000 for EL services when you look at that combined. So it's not only best for the students, but it also is the fiscally responsible thing to do. Next slide, please. So we realize, I've always said that, and especially now more than ever, I think we need to think about ways of becoming more efficient while always trying to prioritize our long-term needs for our students. I've always said that we need to be responsive to the needs of our students and families, but responsible to the taxpayers, and we try very hard to do that. As we advocate for those essential needs, we need to think about the economy and how we can be more efficient. So some of the things that we've done and we continue to do to be more efficient, one example is the solar leasing project that we did several years ago. So really getting in at a very low rate where we're capped in at 8 cents per kilowatt hour. And then we get the credits back from the grid, which has saved us millions, literally millions of dollars since we've had that contract. So that was a wonderful thing to do. Really taking advantage of lighting upgrade opportunities. We had an LED project where we did exterior lights, and the savings that we did from that a few years ago was able to save enough money to power Manomet Elementary School. It was the difference there. So we're really thinking about those energy efficiency opportunities, and when grants come out and taking advantage of those. Putting sensors in areas to reduce any unnecessary usage, upgrading heating and cooling systems. Routine maintenance can be very important to bring down costs. And again, reducing paper usage. When we reduce paper and we're using more technology, it decreases the need to use toner and the expenses for printers, which are just very, very expensive. Also investing in routine and preventative maintenance to keep our facilities operating smoothly. We know if we maintain our buildings and we invest in the maintenance, it will curb significant costs, so we try to do that as much as possible. Investing in our in-district special education programs. I think people see that our enrollment has declined over the years, and it has. It's actually going to be going up. We did a redistricting exercise, and I think with the new growth and development, we had a consultant come in, and we do anticipate our enrollment to continue to go up by several hundred students over the next several years. It has declined, and some people will say, well, why do you have the need for all these buildings if your enrollment is down? And I would say I would welcome people to walk around our schools, because what we've done is we've invested in our in-district special education programs. So we have programs for students who have autism. We have programs for students who are physically challenged or have behavioral, emotional impairments. And by doing so, we're educating the students in our schools, but we're also saving our community millions of dollars. And it's hard to understand that and to intellectualize that, But by investing in those programs, we're eliminating the need to transport students at tens of thousands of dollars a year, and also to have them in these placements, which can cost literally over $200,000 in some placements for a day program. I started my career again in one of those. So really trying to invest in our programs in the district is a really good strategy. And then optimizing our transportation costs, analyzing our routes, really keeping our contractors responsible and responsive to our needs, and really trying to oversee some small components of transportation and servicing in-house. Really, we're looking to see what we can do to take some of those routes over to curb some of those costs, because they are significant.
No, thank you, Chris, for that excellent overview of things that might not be top of mind when people think about what it takes to run the school district. Thank you very much.
Thank you.
And this next section, we'll go through the budget process, look at some historical averages, and then comparing Plymouth to similar towns. And Lynn, you put together the first overview of the timeline, and Chris as well. There are parallels to the school and the town side, so please, between the two of you, maybe Lynn to start out, and of course Derek, at any point you want to add in on these slides, please do. But Lynn, we'll go to you for this part.
So this is really sort of a timeline of the budget process from the beginning until we produce your actual tax bill. So if you go way to the end, it says December, our final tax rate set. So for example, fiscal '23, we just met with the select board this past week to have our tax classification hearing for our fiscal '23 tax bill, which is the current fiscal year that we're operating in. So we started working on that budget way back in the beginning, October of 2021. So that's how long this process goes. So way back in October of 2021, we start to put together our revenue estimates for what we think our new revenues are going to be for that following fiscal year. So in October of 2021, we were planning on the fiscal '23 budget. So right now, we're actually in December of 2022, working on '24's budget. So we've sort of already started this process for next year. So we really look at what are those new revenues that we have to be able to spend, you know? So we have the department, we give out a budget message, we have all the departments submit their budgets. We do that during the month of November. We meet with everyone, we go over everything. During the month of December, we sort of finalize those budgets, and the town manager will recommend a budget to the select board. In January, the select board will then vote on that budget and hand that budget over to the Advisory and Finance Committee. So the Advisory and Finance Committee, during the months of January and February, will meet again with all of the different departments through subcommittee. And this is a way that people can get involved. We're always looking for new members of the Advisory and Finance Committee. We just added a new person last week because we had someone resign. So the moderator at this point appoints new members to the Advisory and Finance Committee. There's 15 members, and they meet by subcommittee with every department to go over the budgets. And then they have a public hearing in February for that budget, which the public and everyone is invited to come to. It's held in this room. And then in March, the Advisory and Finance Committee make their final budget recommendation and produce their books for town meeting, which this is last year's book of the budget. So that goes to all town meeting members. April is our town meeting. Another way for people to get involved is to run for a town meeting member. We have 18 precincts, 162 town meeting members, so that's another way for people to get involved. They meet and vote on the budget, and then once that budget is set, we sort of start the fiscal year July 1, And there are certain things that happen at that point. State aid, we finally know what state aid is. Certain things in the budget might have changed from, 8 months ago when we started putting the budget together. So we finalized that budget in October. We go back to the fall town meeting and make any final adjustments to that budget. At the same time, the assessor's office is completing any valuation or new growth or anything like that. This past fiscal year, for fiscal '23, was a reval year for the town. So once every 5 years, we have to go through a robust process of revaluation. And that was just completed, was approved by DOR, I believe, last week. So that's why we had our classification hearing the other night. And then we produce your final tax rate. So that's been submitted, but to the Department of Revenue. They haven't approved it yet. Once they approve it, then we produce the tax bill. So we're on quarterly billing. So the first 2 bills that you get for the fiscal year are preliminary. They're based on your prior year's taxes. And then when we finalize this, the next 2 bills that we send out, which are due February 1st and May 1st, are based on the actual tax bill, actual tax rate. The next slide.
And just a question, Lynn. So I know a lot of times folks will see after town meeting that there's, what's been appropriated. And then it goes back, well, this started a long time ago. Get yourself involved a little earlier to sort of know what's coming up by the time it gets to town meeting. When is the best time for an average resident, say they're interested and they want to start learning more about what's coming up, for them to get involved?
I know right now, so like next week, Advisory and Finance Committee, we have a lot of new members because we've gotten some new members this past fiscal year. I'm going to be doing a little municipal 101, for them. So that's sort of like getting them educated on how it works. Then they'll go through that whole budget process this year into town meeting. A lot of a town meeting member here tonight has invited me to his precinct, to sort of talk with them about how the process works and try to answer any questions. And by all means, if anyone does have questions, they can always call our offices, to get any information. But they are always looking for new members, for all of our different committees and boards and things like that, for people to get involved.
Yeah, if I can add to that. So one thing we've done a little bit different this year is working with Lynne and her team and our town clerk out here and Mr. Canty in the back. A bunch of us got together and we started to look at these what we call milestones, right, throughout this budget process. So that's kind of the 40,000-foot level. And we reduced that down to a date-by-date milestone. So you would see on this master calendar, on December 13th, the town manager will be presenting his budget to the select board. Then you'll see on January 3rd, the select board will be approving their budget. And so that's a great way if folks have access to that. It's on our website. You can see that. You can get involved in any one of those meetings. Those are all public meetings, so folks can see when the first discussion is going to take place, when that's going to be handed off, and those dates, and when A&F will be holding their meeting. So again, that's something a little bit different. We also included in that the elections, so folks know when the elections are going to take place as well.
Good? All right.
I would say that, as Derek said, we also publicize the process for a budget when a budget hearing is, but I would encourage anyone that has any questions to come to our office. I'm happy to meet with anyone regarding any questions, and I know that our school business administrator would be as well.
Thank you.
So one of the questions that was asked was, how does Plymouth's home value or tax bill sort of compare to others? But internally, for ourselves, this sort of reflects over basically a 10 to an 11-year period what our increase in our overall taxes were each year, what that average home value is in Plymouth, and what that average tax bill equated to. And then in the right-hand column is the increase of that average tax bill year over year. So on average, over those last 10 years, that average tax bill increase was $216. So that's sort of what it's looked like internally. And Plymouth, if you look at the next slide, Plymouth tax bill is really sort of in the middle of these towns that I picked, you know, to look at. And then also statewide, that Plymouth's tax bill is in the middle. It's about equivalent to the statewide average also, right in the middle. So for fiscal '22, which was last year, Plymouth's average tax bill was $6,438, and that's how it compared to these other towns that we picked to look at. And then the Massachusetts statewide average tax bill was around $6,700. So we were slightly lower than the statewide average. Next slide.
All right, and in the next piece coming up here, we have some of the common questions that the three panelists receive on a regular basis, and some of their, asking them for some feedback of their own. But if we do have anyone in the audience here who has a question, if you don't mind, while we go through these questions now, to just write it down, and then we'll go through those at the end, after we go through these questions now. So there are some note cards over here and pens if you don't have a piece of paper. So, and then also, if we don't get to your question, you know, I know that these three town professionals are always available, and we'll make sure that that question gets, you know, to them, and they're accessible anyway, so you can reach out to them as well if we don't get to it tonight. So on that same topic, we have this perennial question: will taxes go up every year, and what should I expect? And that last slide was illuminating to that, but to go a little bit more into this topic, I'll throw it to our panel.
Let me start this one. So, I mean, that's a question I think every community asks themselves. And, I mean, let's be honest with ourselves, based upon, you can see Lynne's data, and your taxes have gone up every year by approximately $216. And so, per average household. So, yes, you know, I think it's safe to say that, you know, when you look at why your taxes go up every year, it's based on three factors. Your values have increased, especially in the last 2 years. Your values have increased exponentially. So your taxes would then rise because of the values increasing. And then again, because of Prop 2.5, we have the ability to raise 2.5% of your taxes. And so again, that's another factor in why your taxes would go up. And last, as Lynne pointed out, we have new growth. That's an additional factor in why your taxes go up. And in a community like this, where you can continue to see new development, new construction, you're going to see your values climb because of that new growth.
All right, thank you. Go to the next question. It says, it feels like all this development is just causing our taxes to go up. Can't we put a stop to it? And I know there's kind of two areas of this. There's the idea of the cost of services that come in with any one household that's a part of that new growth. And then a question that comes up quite a bit is the idea of a building moratorium, and couldn't we just stop it that way? So I'll put it back to our panel for who wants to.
Sure, so I'll take the moratorium question. This actually was a conversation that the Select Board had this past Tuesday. The chair of the Select Board had introduced the concept of imposing a building moratorium here in town. That's a very complex question. That's probably over a dozen questions that have to be answered before you can even impose a building moratorium. You know, first of all, it has to be reasonable. So you just can't impose a building moratorium because you want to stop construction, right? That's actually against the law. In fact, if we were to do that, developments that are already in existence, that already have their permits, they could file a complaint against the town, and then we'd be stuck in litigation. So for example, Red Brook or Pine Hills. So that's one factor you have to consider. And then as far as moratorium, where? Are we talking about the entire community? Are we talking about a specific area of the community for a specific purpose, right? And so you got to answer that question before you can move forward. And so what purpose? Is it because we have concerns about water, for example? And if the answer is yes to that question, then what are we gonna do about it? So you can impose, say, a 2 to 5 year moratorium in that very specific area, so you can do a water study. So those are the different factors that you have to consider for a building moratorium. And one other piece, there had been conversations about doing this in the past, and I forget, there was, wasn't a moratorium was imposed, but I think it was some type of a reasonable growth policy that was imposed. And talking to the Director of Planning, Lee Harmon, what he had said is when they enacted that policy, before, when they were having conversations publicly, what ended up happening was that contractors and developers, they file their applications immediately. Because once you file your application, then you're grandfathered in the process. And so they saw a spike in development because of that development policy that they tried to impose. So again, very complicated question. It's something I think that the board is willing to at least look at with the planning board and have a conversation about that. But again, I think that's something that, you know, if it were to happen, we're probably a year or two away for that to happen.
Thank you. And Dr. Campbell, I know one of the common questions is as new homes come into town and there's new school-age children, that it puts, you know, more of that average cost per pupil right to the bottom line of what you have for your budget. And that's something I think could be a whole discussion on itself, but is there any thing you want to talk about that in regards to that conception of what one house does to the town when there's school-age children?
Yeah, well, it costs, you know, it depends on where the students reside and how old they are and geographically where they would be at school. But as I said, we've, even with the development that exists now, about a year ago, I said we did a study through a company called AppGEO, and through their subcontractors, we looked at all of the growth and developments, and we look at, you know, 1-bedroom homes versus 2-bedroom homes and 3-bedroom homes. And, you know, we see our population in the next, you know, 5 or 6 years going up by about 500 students. 500 students when you have 13 schools isn't significant, particularly depending on where those students reside, but it's something that can be absorbed potentially. But it depends on where they're at. Like right now, we're challenged. As you know, as we've said, our enrollment is down. But if you go into Indian Brook Elementary School and South Elementary School, they're busting at the seams. If we have one new kindergarten classroom that we need because we have a spike in enrollment at Indian Brook, for example, we're going to have to relocate those students because we can't fit them there. So it really comes down to, I think, the age of the students, and where they reside. But we've typically made it work, but it can be a challenge. And depending on the needs of those students and the cost, if there's students with disabilities and whatnot, it would be an additional expense for sure.
Thank you. And Lynn, do you have anything you wanted to add on this?
No, I just know that, I mean, there are costs, you know, in addition to school costs, I mean, there are costs associated with, I think, obviously, every development in town. I know with regards to some of the more dense populations and apartment-type developments, that puts a burden on our public safety services and things like that. So I think all of it is sort of, you know, is a piece of the pie, so to speak. I think every household has a certain costs associated with what we need to provide those households.
The only thing I was just going to add is I think those costs are different. So Dr. Campbell talked about, you know, the type of development that would place a potential burden on schools. But, you know, I know oftentimes in communities, everybody wants to move to the 55 and older conversation because they're worried about the burden it places on school. But what they're not realizing is that those 55 and over complexes place a burden on a different system, you know, so our fire and EMS system. So, and we, in every community, experience the call volume to go up in those communities. So, you know, I think we have to be cautious when we have a conversation about what type of development is the right type of development here in town.
And sort of on the same theme, it's the last of our development type of questions, but in that same category, the next question asks, can someone explain how 40Bs work? Why are some towns allowed to say no? Why are they allowed if they cost the town so much money? And I know there's a lot of questions around this because of this type of activity going on now, and a lot of misunderstandings, misconceptions. I think this is a great opportunity to talk about what it means for Plymouth with these 40B type of developments.
Yeah, so a 40B development, in short, is an affordable housing development, right? So it's not low-income housing, it's affordable. And the 40B statute, it allows developers to circumvent local zoning. So for example, what you're seeing now is there are developments that are being constructed in commercial industrial zones that aren't necessarily residential zones, and it's because they fall under the 40B statute. The other thing with 40Bs is that the developer does not have to apply and present their development in front of any other board except the ZBA. So they don't have to go in front of the planning board, they don't need select board approval. The only thing they have to do is file a comprehensive permit with the state. The state grants them their permit, and then they work through the ZBA. The ZBA can negotiate a friendly 40B, which is when you accept the project in town, and you start to negotiate things like infrastructure and aesthetics and things of that nature. You can negotiate the percentage of affordables in that development. They're only required to have 25% of the development is affordable, the other 75% is actually market rate. So to a developer standpoint, it's really easy to do a 40B because you're still bearing the revenue from the 75% market rates. So that's why it's attractive to developers to do 40B projects. Some towns can stop 40Bs if they have already met the 10% threshold required by the state to have affordable units in your community, meaning that when you look at your inventory of homes, 10% of those homes need to be affordable in order to prevent 40B projects from entering your community. So you see more urban communities, they don't worry about 40Bs because they already have a number of, they have more than 10% of their homes are already affordable rates.
All right, thank you. And it's not necessarily a tax, but it's definitely a consideration for a lot of residents. And it says the cost of water and sewer keep going up. Is there anything I can do? And kind of two of the topics that we wanted to explore were some of the town's programs to reduce usage for the residents, but also there's a town committee on this topic if people want to get involved. So, yeah. To the panel, maybe Derek again?
Sure. The Water Conservation Committee actually just presented this past week to the Select Board. They presented a number of ideas that they were asking the Select Board to consider as far as water conservation efforts. It was a great back and forth dialogue, but I just want to, before I continue on that conversation, I want to talk a little bit about why water and sewer costs continue to climb. And it's because we have to annually and regularly invest in our water and sewer infrastructure. So this community, probably more than any other community in Massachusetts in the last 10 years, knows what happens when you don't take care of your water and sewer infrastructure, e.g. Veolia, right? So they didn't take care of our 4-mile sewer main, and that cost the town, tens of millions of dollars. So the DPW does a great job in annually investing in the water and sewer infrastructure, and there's a cost associated with that. And that cost is borne on the enterprise account, which obviously is many times turned over to the ratepayers. So that's part of the reason why you see the costs continue to climb. But I think as far as what folks can do at home is like just really think about conservation efforts. I would say that one of the items that continues to come up year after year is irrigation of our lawns. So there's a cost associated with irrigating your lawn because you're not just paying the cost of the water, but you're paying the cost of the sewer. That's actually the sewer cost, even though the water's not going into the sewer system. So you have to be mindful, you're actually paying for that twice, even though you're only using one component of the system. And then I would say, just as examples, that when you look at the cost, we have two projects that are happening right now. You have you'll see equipment that's already been mobilized on Water Street. We have the sewer interceptor project that's actually taken place. We have the flood wall project that's taken place on the waterfront, and then the Management Water project will be taking place soon as well.
Thank you. The next couple of slides are questions that are specifically for each of you panelists, and we'll go through each of you for these next slides, but this is kind of a general catch-all. If there was anything that you wanted to talk about that is surprising or illuminating to the average person regarding the town department's budget, finances, that you get asked frequently that you wanted to talk about in this forum. And why don't we start with Dr. Campbell?
Yeah, well, I think what might come up a lot is why our costs continue to go up if our enrollment's going down. And I think a piece that really drives that is the changing demographic, and I got into that a little bit. On top of some of the things I've already said, people don't understand that we pay for the charter transportation to 2 schools. We're transporting students and paying for the tuitions to agricultural schools. We're transporting students who are homeless. Our demographics have significantly changed in recent years, too. 1/3 of our students are now considered economically disadvantaged. This has doubled since my tenure here in Plymouth. We support, on average, a little over 100 students that are homeless and their families each year. We have local food pantries in each school where we send students home with backpacks of food for the weekends because of the food insecurity in our system. So these are things that in my 22 years here as a resident and my 15 years as both assistant superintendent has really changed. And another being that we went from about 0.5% of our students being English language learners to about 7% of our student population. So those are things I think that not many people may know, and the costs that are associated with servicing a more diverse and challenged community. Another interesting thing, which people may not know, that our facilities department maintains 1.4 million square feet of indoor space, and we have 323 acres of land that we're supporting. And in that, our budget has approximately 1.4 million dedicated to all supplies, vendors, equipment, which is vehicles, tractors, mowers, to support that property. So if you put that in perspective, that's about $1 per square foot plus the exterior. So think about your own home for a moment. If you have a 1,500 square foot home, imagine spending $1,500 to maintain the inside of your house, the exterior of your house, the lawn, the gutters, the paint. So we try really hard to keep costs down, and this is because of our fantastic facilities department and the people that do that. But when you look at the supplies and the vendors that we use, we try, I don't think people understand how significant that is. So I just wanted to point that out as well.
Thank you, Dr. Campbell.
You're welcome.
Derek?
So I'll just touch on a slide that we're going to talk about next week with the select board, and it's not here today, but so when I think of the town's budget, I put the $270 million aside, and I try to focus on the year-over-year revenues, and when it makes it easier to consume as a novice when it comes to municipal finance. So, when we look at the revenues, you get like Lynn pointed out, 2.5% increase, the new growth in state aid going up by 3%, and some of the other local receipts. It's approximately $9 million or thereabouts. And so that's your new revenue. So that's kind of the world you have to live in year over year, that $9 million. But then when you look at your year-over-year expenses, pension goes up by 8%. Health insurance goes up by 7%. That represents a little north of $3 million. Our wages year over year represents about $3 million. And then you have other fixed costs like debt service and utilities and all those things that have been pointed out to that go up. The point is, when you start to narrow down that new $9 million in new revenue that you can spend in this year's budget, and you take away the wages and the health insurance and the pension, there's not much left over. And so when people ask, where's all this money going? The money is almost already spent before the budget even begins. So from a budget building standpoint, unless you're in a deficit, it's typically very easy to build your budget year over year, unless you have a deficit, and then you really spend countless hours trying to figure out how you're going to balance the budget.
Thank you, Derek and Lynn.
So just one thing that I think that I would like to point out is, because I think sometimes people think that everything that we do is paid for by their taxes, but I just do want to point out that many of our departments, I mean, several of them, including the schools, research grants. There's a lot of grants that we get for the town of Plymouth for either capital projects or for salaries or for other types of things that the department needs to do, or for those services that they need to provide. I mean, we receive millions in dollars worth of grants. So I just wanted to sort of point that out. And I think sometimes people think that it's just their tax dollars that are going towards everything that we do. I mean, we try, and we encourage the departments to research for those grants, to try to help pay for things that we just can't pay for in their budgets. And it was such a focus that we actually, have a special position that's dedicated towards doing that and assisting the departments in looking for those grants.
Thank you, Lynn.
Yeah.
So for each panelist, what are some areas of focus with your respective roles over the next 5+ years for the town as it relates to the average taxpayer? And this time, why don't we start with Derek?
Great, thank you. So, I've talked a lot about long-term strategic planning, and so I know this question focused on 5 years, but when I think of long-term strategic planning, I'm thinking 20 years plus. And I honestly mean that, and I've had the opportunity this past year to work with the select board, I think for one of the first times in a long time, to develop a set of goals and priorities, right? So this is kind of looking out, what do we need to do in the first 12 to 18 months, but what are we going to do kind of 5 years out? And so for me, I really want to think about where do we need to be as far as our long-term financial stability when we're all come and gone, and that's 30, 40 years from now. And I really think that when you look at the town's finances, we really start to have a serious conversation about OPEB. And although it's not affecting our annual budget right now, it's going to have, in my opinion, catastrophic impact for our children in the future. And I'm going to tell you why. So we've been going through these exercises, the budget building process, and we started to look at our OPEB liability. And let me ask this group. Do you explain that term? So OPEB is Other Post-Employment Benefits. It's an acronym. Bottom line, it's retiree health insurance. And so we pay for retirees their health insurance, which is a good thing, and every community does that. But Plymouth's a little bit different. I'm going to tell you why. So let me ask you this question. Do you know what rank Plymouth is when it comes to its OPEB liability in Massachusetts? Well, does anybody guess where we would be? First. No. So we're fourth, but we're close, right? So who do you think would be number one in Massachusetts? Boston, then Springfield, then Worcester. Plymouth is fourth. So you're talking about large metropolitan areas. Boston, 600,000 people. Worcester, 200,000 people. Springfield's about 150. And when you look at the population, so what drives your OPEB liability? What drives your OPEB liability is retirees. What drives retirees? The number of employees you have. What drives the number of employees you have? Typically your population. So if you have to serve a large population, you got to hire more employees, right? So if we went by that analysis or that philosophy, we wouldn't be in the top 10. We're not even in the top 10 in population in Massachusetts. However, we're number 4th ranked in OPEB liability. And so those are when I answer this question, those are the things that we're starting to think about. Where do we want to be in 40 years from now? We don't want to strap our grandchildren to this debt that we're incurring today. And so, working with the select board and others, we're going to start to have those conversations.
Thank you. And Lynn?
As a finance director, obviously, I would be working with the town manager in those efforts of long-term planning, long-term financial planning, working on our various ways that we can help mitigate and reduce that OPEB liability. So that would be my focus within the next 5 years, and probably at that point, I would be retiring, so.
Is that your
That's not
focus?
true.
I'm
That's not
gonna
true.
give the young guys are gonna take over. Sorry.
Gotta have a little levity.
Chris?
Thank you, Lynn. I think transportation, I think if you wouldn't think that is something that is, 10% of our operating budget, which is extraordinary. When I think about the amount of money that we spend on transporting students. So this is something that is, strategically, I would like to look at both how we advocate for reimbursement there, but also how we can minimize those costs. And it's very challenging given the geography of our community, but I'm committed to looking at that. We're always looking for ways to be more energy efficient, and I think as we look at different projects, we need to consider that. And another thing is our facilities. We have aging facilities. I would very much like to see us consolidate those over time, if possible. But we can't do it under the existing circumstances. We have 2 beautiful high schools that are relatively new. One's actually in its 13th year of, 11th year of use, now than the one that opened in 2017. We have a middle school that is from 1999, and then we have a 70-year-old building, but our elementary schools are quite old. We have 4 of them that are approximately 50 years old. We have 2 that are 70 years old, and then 2 that are over 100 years old. They're not designed to meet the educational needs of some of the things that I talked about this evening. I would very much like to see us, we also did a facilities assessment of all of our buildings as a capital project in 2021. There are tens of millions of dollars of needs in these old buildings, so we can't. It's like throwing money out the window by investing in buildings that, in my opinion, that are not suitable to sustain for the next 20, 30 years. So this is something that we'll continue to look at, but I would very much like to see us over time, not in the next 5 years, but next 10 years, certainly see us have new developments where we could potentially consolidate some buildings, and we're looking at, and being very energy efficient. There's a great example in the Watertown Public Schools, actually built 2 elementary schools that are energy neutral. So it would be very interesting to see if we could do something like that in the foreseeable future.
Thank you. And now this, everyone's favorite question, and when we talk about that magic wand, we're talking about things like that piece of legislation that is very tough to move, or it's something that is feasible. Winning Powerball would be great, but the practical things that you'd really like to see if you had that magic wand, what would you use it for the benefit of Plymouth residents as it relates to town finances? And we'll start with Lynn, who doesn't realize that she's never allowed to retire ever. So.
I mean, this is a really tough one, because there's a lot of legislation, that you wish that the state, because a lot of the things that we do, because people will say, well, how come we need to offer that, kind of thing. So and it always goes back to, well, Mass General laws, dictates that we need to provide this, so I mean, the question of health insurance, well, why do we need to provide that? Well, Mass General laws dictates that we need to provide health insurance to anyone who works 20 hours or more in our town. So then, there are other things, when Chris talked about like the unfunded mandates, I mean, there's a lot of those statutes that require us to do certain things, but the states doesn't necessarily, I mean, our state aid is only 13% of our overall revenues, you know what I mean? With the mandates that we have to do in all of our different departments, it would be nice if the state revenue, you know, the state sort of, you know, changed their formula on how they give cities and towns some money. So if I had a magic wand, that's what I would like to see them do, is change that formula.
Thank you, Lynn. Chris?
I think some people here would like to see a magic wand that would have Lynn stay on and not retire in 5 years, because she's great for this community in terms of finances, as someone who's worked with for so many years. But in all seriousness, I think Lynn already spoke to it, but the state mandates and the underfunded or unfunded mandates, as I said, if you want to read that report from Suzanne, the state auditor, $1.2 billion, and there's a lot of mandates, certainly that affect the educational system. You know, special education is underfunded, and transportation, as a non-regional district, and as a district that is much larger than regional schools, most regional schools that receive reimbursement, that would be something that I would gladly wave my wand if I had it to get changed.
Derek?
Well, I think I'm going to be the trifecta and also say the unfunded mandates pose a significant burdens on the towns, cities and towns in Massachusetts. However, my thought is a little bit different as far as how we solve that. So one thing I can appreciate from the state is when you think about how they fund regional dispatch, right? So they really want to incentivize cities and towns getting together and regionalizing dispatch centers. They realized that economies of scale work. And how they did that is they imposed a $1 fee on cell phones. And they take that $1 fee on cell phones, and then they put that through a grant process so that cities and towns that want to work together. So I talked a little bit about infrastructure and that our need for infrastructure improvements. You know, I would really love to see if the state came up with some way where they could impose some type of surcharge on some payer where those dollars would come back to cities and towns to help improve our infrastructure.
Thank you, Derek. Thank you all three. And we have a lot of similar questions that came from the audience. We have just a few minutes left, and I will go through a couple of these. And again, the ones that we don't go through, we'll definitely get to you all to respond back to. But first one is for Dr. Campbell. With what would you estimate the gap to be between the unfunded and underfunded mandates and Chapter 70 funding?
Well, I think the Chapter 70 funding hasn't really, I can't imagine, and Lynn probably might be a better expert on that, but it hasn't kept up with the rate of inflation, to say the least. But the other unfunded mandates across, we're talking millions. I would have to calculate that, but it could be upwards of $10+ million at least in underfunded or unfunded mandates.
Yeah, I mean, just in fiscal '23 alone, the school budget alone was $109 million. The town, when we do the end-of-year school, the final end-of-year school report for the school department, which goes to the DESE, Department of Elementary and Secondary Education. So the town has to fill out a section of that end-of-year report for the town costs that we provide out of the rest of the budget for the school budget. So that number is like 30 to 40 million between the benefits, the debt service, the administrative kind of support for the school department. So our Chapter 70 money is like 26 or 27 million. So when you look at that number to reimburse the town for all of the school costs, it's just crazy how small it is, and that's why our taxes make up the rest of it, So I mean, if they, there's a lot of unfunded things in all of that, which Chapter 70 just doesn't even support.
And a question along that same lines had to do with the transportation that you talked a lot about, Dr. Campbell. And, you know, is there anything that's being done right now to address this so that Plymouth will be able to get reimbursement up at the State House or otherwise?
We've worked with our legislators, and we continue to do that and try to pass something that will benefit the town of Plymouth. It's failed on 2 occasions, but we'll continue to do that, but there's currently nothing to speak of. You know.
And just a couple more here. One has to do with the question about 40Bs and that current percentage of affordable housing that Plymouth has right now. We know that 10% is when the threshold that you can say no. Where are we right now in Plymouth?
I want to say around 6%. 6%. Selectman Helms nodding his head, yes, it's around 6%. So we have a long, it's a little bit higher, so,
So we're making some progress.
And then I think time just for one more, because we're coming up right on the end of our hour and a half time here. So this question has to do with that split between commercial and residential tax burden, and that the percentage of the residential burden has been inching higher and higher, and it's already at a high amount. And what, if anything, can be done to sort of flip that? We know commercial is the opposite side of that. And, you know, just where do you see this continuing to go in the future, knowing the landscape of Plymouth?
So as far as, if we're referring to, the finance department has always recommended, at least for the makeup of that property taxes, where 84% of it is residential, and, let me see, let me get to that right here. So 85, I mean, we just had our tax classification the other night. 85% is residential, 8% commercial, 4% personal property, the remaining industrial and the Pilgrim plant. So to split that rate, to charge a higher rate to the commercial versus the residential is not recommended in this community, only because the number of commercial parcels that we have, the value of those, the majority of them, the value of them is less than, like, between 500, well, less than 500,000. So for a smaller business to bear a much higher tax rate, we just think that it would not be friendly to those commercial people to come to Plymouth. It's just, it doesn't make up enough of a percentage of our overall capacity to be able to charge that split rate. I mean, the other side of the coin is to try to increase the commercial development, but over the last 5 years, it seems like we pretty much have stayed pretty stagnant on that. Like, we haven't really grown any new commercial parcels. I mean, a lot of it has to do with zoning, a lot of it has to do with areas of town, water, you know, different things like that. And I know that it's been quite a challenge. And I know a lot of our select board members have wanted to increase that, and I believe that's one of their goals, you know, to try to work on that.
yeah, and I would just add just a little bit that, as Lynn pointed out, you know, this is one of the goals of the select board. They're very interested in commercial development, understanding the impact it can have on a community. But I would say that commercial development continues. The reason you're not seeing the shift in the 85% versus the 15% is because residential development is outpacing the commercial development, right? So in order to slide the scales the other way, you're gonna have to see major commercial infusion from developers certainly outside of this area, and that's just not what we're seeing right now. The Economic Development Foundation, you know, they're out there on a regular basis trying to recruit businesses to come here, but what you're seeing is mostly the small, I would say, like mom and shop businesses that are coming to town. You're not seeing, you know, the big commercial industries coming to town.
All right, thank you. And to wrap up our last slide that talks about what can you do about it all as a resident of Plymouth? And I know we touched on many of these topics throughout the forum, but if there's anything else in terms of where to reach out to, how to get involved, I know there's dozens and dozens and dozens of openings on the different committees, and there's an excellent resource on the website that talks about what they are. And maybe, Derek, you could talk a little bit about anyone who's sitting back and thinks, hey, yeah, I want to get involved. Like, where could they start?
Yeah, so I mean, again, most towns, really, they're built on volunteer boards and committees. We have over 50 volunteer boards and committees, and we appreciate the fact that they're doing this for free because they help us. A lot of them are subject matter experts in certain areas, and they dedicate their off time to support us. And we have, as you pointed out, Patrick, dozens of vacancies on a regular basis. The board, I feel like, is always appointing new committee members at every meeting, interviewing folks that want to get involved. I would say where those individuals can start, Anthony Senesi is our administrative assistant. He manages the boards and committees. He's on a regular basis putting information on our website, on our social media page, to try to encourage folks to participate. So I would say start with Anthony on the 4th floor.
All right, anything else, Lynn or Chris, on that?
I would say in terms of getting involved at the schools, you're always welcome to volunteer. We'd always welcome that. But in terms of the inner workings of the school, their school improvement plans, which also gets into budget, we're always looking for community members to represent on our school council. So if you ever want to get involved in a particular school and a school council, we would welcome your involvement there as well.
Yeah, I mean, I would just encourage people if they, especially the finance part of it and the, about, focusing on your taxes. I mean, becoming either a finance committee member or a town meeting member, or a select board member, those areas could definitely be the area that you would like to look at.
Wonderful. Well, we're now at the end of our forum, and I just want to thank our amazing town professionals here who, as you know, are going through the budget planning process right now and are exceptionally busy, as they are all year round. So thank you all for your interest in coming and watching, and we'll have this on the League of Women Voters website, which is at PlymouthLWV.org, and we'll also put the slides up there as well. And thank you very much.